Good morning to everyone in Europe and good afternoon to everyone in China. Welcome again to the EU SME Centre webinar series for today, Tuesday's webinar. I'd like to remind a few of you who the EU SME Centre is. We are an initiative from the European Union to support European SMEs in their preparation for the Chinese market, and we're doing that through the assistance to SMEs through first line of advice. We're doing that through a number of services in 4 areas on business development, legal issues, standards and conformity assessment, as well as HR and training advice for SMEs. We have various services on our website or via our website. We answer your inquiries. We have a series of publications. We develop face-to-face trainings, and we have a number of databases, and we translate trainings also in webinars like the one today. I'd like to remind you, I think some of you have participated to the webinar already, but you can see again from your webinar panel that you have the possibility of raising a number of questions you have. This is one of the different tools, and please use this to raise any questions you would have throughout the webinar. We've got quite a few participants online already, so we won't be able to take all the questions probably, but if we don't manage to take your questions during the webinar, don't hesitate to follow up by email if you're registered already through the eusmecentre.org.cn platform, or if you're not, we'd like to invite you to register on the platform. So today we've got quite an exciting webinar coming up again. I think this is now our 22nd edition for the webinar series, and we will be addressing today how to be successful in the machinery industry in China. And for this we have Stephanie Hedloff with us from the German Engineering Association, VDMA. And with this, maybe I'd like to give you the floor, Stephanie, if you could maybe introduce yourself in a few words, as well as the planning you have of the points you will be covering with us today. Mm-hmm. Welcome.
Thank you, Benoit. My name is Stephanie Hedloff. I'm the Chief Representative of VDMA in China. VDMA stands for the German Mechanical Engineering Federation. We are Europe's largest industry organization. Today I would like to give you an overview about the machinery industry and some comments and recommendations from our side, how to be successful in China in the machinery industry, and maybe also some points how to enter the market when active in the mechanical engineering machinery industry sector. First of all, I prepared one slide on the VDMA, so I would like to say a few words about VDMA. So we are a pure mechanical engineering federation. We represent 3,100 European member companies, representing about 970,000 employees in this sector. Any company who has a production site or a service center in Germany can become a member of VDMA. So we have a strong portion of German companies in our federation, but also European member companies and also a few Chinese companies. For example, if Sunny took over Putzmeister company, so we also have Sunny construction machinery company as our member. So we do not represent automotive engineering nor electrical engineering, just to mention this. Our China office was established almost 10 years ago here. We have 2 offices, one in Beijing and one in Shanghai, and 12 experienced engineers. You see the website where you find further information. Now I would like to start to give an overview about worldwide mechanical engineering and trade. So If you look at the world trade, here I prepared a chart on the shares in world trade of top machinery supplying countries. Germany, this is the 2011 year. In 2011, Germany accounted for 16.5% of the machinery supplier worldwide, closely, well, followed by USA and Japan, and also followed by China. So I think this chart sets the mode for today's topic. China is a very big customer market and is becoming also a strong competitors market. The second slide. Sorry. Okay. China is the largest customer market for worldwide mechanical engineering. There's a lot of manufacturing here, which attracts overseas and European companies to sell their high equipment and mechanical engineering into China. This actually is a slide from the European SME Centre, looking at the registered members and inquiries from the machinery sector, and it really gives a very colorful picture about certain company inquiries for China, how to enter the market.
In fact, I think, as you were mentioning in the run-up of this meeting, this is actually going to be very much in line with some of the statistics which you'll show later on also, actually. Yes. So we're very much in, well, at least our statistics reflect a little bit the inquiry, well, the needs from European SMEs in that sector.
Yes, yes, that is true. That's correct. So basically, China is requiring high technology and mechanical engineering equipment from Europe, from overseas, and there is really plentiful chances also for small and medium-sized companies, because for certain equipment there are really niche players in Europe who are the worldwide leader for a certain process technology or a certain equipment, and this is highly in demand in China, and for certain sectors also this is being subsidized in China. So I think the market entry or market and sales opportunities of these European SMEs in particular are very positive, and there is a very optimistic view also from our VDMA side for European mechanical engineering sales in China in the upcoming years. Okay, so maybe then we continue with the next slide, okay, on what is China exporting and importing. As a European federation, part of our work is to collect statistical data. We do this worldwide. We also do this not only for mechanical engineering in general. We do break it down to 40 individual subsectors, as we have in our federation 40 subsectors. Today I would like to show you the worldwide machinery exports from China, most recent figures from 2012, annual figures we have collected. So actually you see that the exports from China have been going to United States, Japan, India and Russia, some also to Hong Kong, but the exports from manufactured machinery then go into third countries. If we look at the imports, where do the machinery imports? Okay, sorry, here, okay. This is China's worldwide machinery imports. So where do the mechanical engineering equipment and machinery parts come from? Where are they sourced? In Japan, in Germany? Okay, sorry. In Japan, in Germany, in United States, and in Korea. So China is importing a lot of machinery also from Europe. So this slide not only shows imports from Germany, it also shows imports from Italy, France, Switzerland, United Kingdom. This shows that for the high technology and high-end segment, machinery segment, there is a strong demand in China. Okay. Then, once again, we look at the machinery imports from Europe, EU 27. Okay, and then there is a strong share, the total machinery imports in the year 2012 from China, into China from Germany, amounted to over 50%. The total machinery imports amounted to 33,772.9 million euro in 2012. So I think these figures also show strong demand, once again, also for specialized equipment from Europe and specialized equipment for certain niches. We here have identified European countries, Germany, Italy, France, United Kingdom, Austria. 16.59% are other European EU 27 countries, and I think this clearly shows it's a big opportunity for European companies to sell their equipment to China. Now, again, why am I not only looking at the imports of China, but also at the exports? On the one hand side, China is a very strong, large, worldwide largest market for mechanical engineering. But in the recent years, there has been a very clear trend to becoming a stronger own domestic manufacturer of mechanical engineering, which means that China also is very actively supporting the development of the domestic mechanical engineering sector, and also then machinery sales not only for the China domestic market but also for exports to third countries. For example, exports from China to other ASEAN states, exports from China into Africa, exports from China into South America. So this slide shows the amount of machinery exports in the year 2012 from China into Europe, and the total machinery export is a lot less than what China is importing. It's about half, standing at 14,915.5 million euro. Once again, here you can see that countries, Germany, Italy, UK, France, Netherlands, and a lot of other European countries are active in mechanical engineering trading with China also in the past year. Okay, so this is the overall picture on exports and imports.
And actually, I mean, obviously all these numbers are showing, and I'm thinking about the slide where you see the timeline that the Chinese industry is becoming quite strong. I think you mentioned that in quite a few slides afterwards to show that there is growing competition, and that well, this is not necessarily good news, I guess, for our European SMEs.
Yes, that is true. The message here should be there is a lot of opportunities, but it's also a challenge to come to China and be active in China. I fully agree. So actually, also today is a good chance to spread the message that the opportunities in China should be analyzed carefully, and also every company, enterprise who would like to be more active in China and maybe have more sales activities, who should have a very clear definition of the strategy, how to approach the market. Yes, I fully agree.
Thank you. But we're just going into the detail now actually of all that, so I pass back on to you, Stephanie.
So if we look at the market segments, I would just like to put in this slide, of course China also has a China Mechanical Engineering Industry Federation, and this is like our sister federation we have been working with very closely for the past 10 years. The China Machinery Industry Federation, CMIF, is the Chinese Engineering Federation. They have about, 78,000 member companies in the mechanical engineering sector. They are divided into 48 sub-associations, quite similar like VDMA is, but there's a big difference. They do include the automotive manufacturing and also electrotechnical and electronic manufacturing. So this is a little bit different setup. The reason why I am naming this is that because of this CMIF Industry Federation, there is also the possibility to contact Chinese potential customers or partners through this federation. So in China, from my point of view, it is also helpful if you want to find new customers in China to have a look at the official associations, the official governmental setup, who is active in the machinery sector, and also since China has an estimated amount of 120,000 machinery enterprises representing about 20 million employees, which may be compared to the overall amount of people living in China is not that much, but there is a huge potential either to be a supplier for certain enterprises in the whole value chain actually of the components of mechanical engineering. There also are maybe opportunities opportunities for companies to cooperate for alignment, and there is also business opportunities to enter the China market with a good standing partner in China through this channel. So that's why I put this information here. And actually, CMIF has a very good informative website, also in English language. So for a certain sector, if you are looking for certain information in the run-up of formulating your China strategy or thinking about market analysis, it is quite helpful to look at the Chinese Machinery Industry Federation website. Okay, thank you. So now maybe we can say a few more words about the details, about the sectors. The machinery industry in China is developing also quickly. I already showed earlier that in 2011 and also in 2012, China is leading the top 10 ranking of worldwide machinery output, followed by America, Japan, Germany, and Italy. The total machinery output in 2012 was estimated at 678 billion euro. It's always a little bit how do you say, it's a little bit of a challenge. These are data from the China Mechanical Industry Federation provided, and because they are counting the mechanical engineering sectors a little bit differently, this figure maybe is not 100% comparable to the figures that VDMA for Europe collects. In any case, the development of China's mechanical engineering is steadily increasing in the years 2003 to 2011, and there was an especially and very high increase in the years 2010 and 2011, up to 25% increase year on year. That was a very high and very strong development. Now, in 2012, the recent year, the China economic slowdown led to a decreased exports from Germany, almost less 10%. It was less 9.6% year-on-year base, so 2012 compared to 2011. Of course, has to do with the fact that the Chinese domestic economy was not growing at a two-digit pace anymore, but it grew in 2012 at a single-digit pace, which is still a very positive development compared to other global areas. The Chinese Machinery Industry Federation is predicting a two-digit growth, annual growth for the mechanical engineering industry in China for this year and next year. They had predicted in November 2012 an annual growth of 14% for 2012. That was also met. I think the real figure was 12% in the end. For this year and the next year, I think we can maybe expect a single-digit growth. There is still a lot of overcapacity in the mechanical engineering sector in China, and companies still have to deliver their finished orders to the Chinese customers. So we expect, VDMA for 2013 is expecting probably a single-digit growth for mechanical engineering in China. In any case, it's still a positive business climate. There is still a lot of opportunities for companies coming and entering China. Those companies who enter China and who have not been here themselves, meaning who have sales activities, who have dealerships in China, who are helping them to sell mechanical engineering and equipment, might need to have a very close look at the country where to be active. The next slide. Sorry. Okay. The next slide is an analysis from 2011, where obviously the mechanical engineering industry was stronger than 2012. This is analysis and looking at the provinces. China is a very large country, and for any SME who is active in China, has customers in China, and maybe has a certain sales volume in China that requires this company to make further steps to proceed in the market, to establish some own subsidiary. It's very important to find your area, to find your sales area, to identify in which location you should start with your activities. Yeah? Benoit wants to add something.
I mean, we're here seeing the correlation between the investments and then the output value. Provinces like Hebei and Inner Mongolia, as well as Jiangxi, where clearly we can see that the investments are higher than the output. Does that mean that these are provinces where you see more potential maybe than others? Of course, it depends on the sectors, but speaking on a general basis, can you take these as a factor? Is it useful to look at that in that way?
Actually, yes, it is very useful to look at it that way, because the investment in Jiangsu province and also in Shandong province and Guangdong province is quite high, and actually it is relating to the setup in the past and also present of our member companies. There is one comment I would like to make. Actually, the investments in mechanical engineering in Guangdong province have decreased. So Guangdong province, at least in the past 1 or 2 years, seems to have taken a focus on other service industries more than the mechanical engineering sector. But for Jiangsu, Zhejiang, Liaoning, Shandong, northeastern areas, these are all areas where mechanical engineering companies are looking to invest into new company sites. It also has to do with the fact where the final customer industries are located, of course. So if you look at the automotive industries, where you have the whole value chain actually of the suppliers, where also some of the mechanical engineering companies are active, they are following the automotive manufacturing industry. So I think this is a good relation. Yeah. The second slide shows just the geographical overview. Actually, a lot of mechanical engineering can be found, overseas investment for mechanical engineering, according to my information, can be found in the east of China, in and around Shanghai, Zhejiang province, Jiangsu province, Anhui province. Also in this area, many companies already have established factory sites, and it's very difficult to expand the site if you want to increase your business. There is a lot of investment development parks who are fully developed, and there is not much space. So for newcomers, it would be advisable to maybe see if the Chinese customer side also has a cluster in another Chinese province, for example, in the northeast of China, or in the central areas of China. It might be advisable to go to these second-tier cities or even third-tier cities and cooperate with dealers in those areas. This also is related, of course, again to the competition. You have your Chinese customers in China, but also it would be advisable to have a look where is the Chinese competition, if in your sector there is any Chinese competition. Sometimes also the competition might be a lot of other European companies. Then it might be even more advisable to go to a different province than where your competitor is already established. Mm-hmm. Yeah. Okay. I think then we should talk about the key growth drivers and trends. See, actually the German Machinery Trade 2012, once again, China is the largest customer market. I'm repeating myself here, so the country of destination, China, is becoming more important for mechanical engineering exports. But it's also, in the meantime, since 2012, the 5th largest supplier for German machinery imports. So we analyzed the German bilateral relationship on this slide, but I think it shows a trend that also goes for other European countries, that not only delivery of mechanical engineering into China is important, but also China becoming a very important supplier for European companies. It's actually a two-way street. Now the growth drivers from my side, there is some actually documents, and there is some very public sources in China how to see in which direction will China develop. It is a customer market for high-end machinery. China is setting a clear target for upgrading its manufacturing industries. These targets are normally set by the National Development and Reform Commission, NDRC, and from my point of view there are two very important documents. One is the 5-year plan. Currently we have running the 12th 5-year plan, which I think is 2011 until 2016. There's also another document which is mostly Chinese language. It's called the Guideline Catalogue of Industries for Foreign Investment in China. This catalogue is not done on a 5-year basis like the 5-year plan obviously is, but this catalogue is being amended every year annually. And this interesting guideline catalogue actually has three sectors. It has encouraged foreign investment, and it has limited foreign investment, and it has forbidden investments. It defines on a sector level actually which kind of equipment is required in China. So for mechanical engineering, equipment and machinery, it is in the past always and currently has been an encouraged foreign investment for China, which means that there is also some special tax incentives and some subsidies to import high-end mechanical engineering from European countries. There's only one exception if we look at the mechanical engineering. Only the sector of mining equipment underlies restrictions. Yeah, so there you have to work with a local partner. In general, companies who would like to establish a subsidiary in China, they are free to establish a 100% wholly foreign-owned enterprise. They do not, with the exception of mining, they do not have to have a Chinese partner. They are free to choose. Okay, so then the current 5-year plan, the 12th 5-year plan, this actually was identified by EU SME Centre, and it actually matches what VDMA also has been looking into. So this 5-year plan is introducing 7 strategic emerging industries. You see them on the left side of the slide. You have the energy saving and environmental protection industry, new generation of information technology. You have biological industry, and the fourth, from my point of view, is relevant for mechanical engineering. It's the high-end equipment manufacturing industry. So clearly the focus from 2011 to 2016 is to upgrade the manufacturing industry and to purchase and to implement more high-end equipment. The other ones, just to name them, are new energy industry, advanced materials, and new energy auto industry. Number 7 also includes the batteries and also some of the power transmission. So then if we look at the customer side, at the industries, we have the aviation equipment for railway, marine engineering, and intelligent equipment manufacturing industry. On the right-hand side, I summarized from my point of view the downstream industries that are relevant within the 12th 5-year plan. I already mentioned the automotive industry. The second industry sector or equipment I would mention separately is power transmission and also fluid technology. In a lot of machinery industries, power transmission is the key to this equipment, and for certain sectors, for example railway, the high-speed railway, for example, there are certain high technology solutions necessary to provide this kind of high-speed railway. So there is still a high demand of imported equipment. Construction machinery also is a sector where some new high technology can be invested. Although for the construction machinery there already is a very strong competition in the domestic market in China. Mining equipment, aviation, aerospace, ocean equipment, material handling. Maybe I point to this sector. Material handling is actually also a sector which can be found in different industries. For example, in the aviation industry, whenever there are new airports being built, whenever there is any kind of material hub being built, there is need for certain material handling solutions. This sector, at least from the German export perspective, has been developing very well in the past year, and this is a strong opportunity. Last but least, the agriculture machinery market is in focus of the 12th five-year plan, and actually this sector, especially in China, will experience a higher mechanization level in China. So there is also very strong demand for imported agriculture machinery for large areas, large tractors, large fields, to modernize the agriculture industry in China. For the detailed intelligent equipment manufacturing industry, there also is a very strong demand, also since 2 years already, for high-end CNC machine tools and numeric control metal cutting machine tools. So this gives some examples in which areas the China market has sales opportunities for mechanical engineering. As I said, the five-year plan is a clear roadmap in which direction you should go. Maybe a comment, the five-year plan is broken down into the industries, so there is always also a mechanical engineering five-year plan actually. What details, so this you see on the right-hand side, what I just introduced. Okay.
Actually, Stephanie, because you were mentioning the 12th five-year plan and also the guides, the guideline catalog on industries for foreign investment, and there was actually just a question where this can be found, and I think the best is to actually refer to the Ministry of Commerce. Yes. So yes. Mofcom.gov.cn. There is an English version of the website, and you can actually access to the guidelines there.
Yes. Yes. That's true. It is actually published, the five-year plan, and also this guideline catalog of industries of foreign investment. You can find it at Mofcom, but it's in Chinese language. It's normally not available in English language, as far as I know.
Okay.
Okay, this is one slide to, and actually my final slide for talking about mechanical engineering. Again, to give some more information on this key segments for China. So based on the 2012 production data, I have given you the top 5 production areas for mechanical engineering in China. The largest sector with the highest turnover in production in domestic China is mining equipment, with an estimate of 537 billion renminbi for the year 2012. Again, these figures we have from the China Machinery Industry Federation, CMIF. They are publishing these figures. Then second segment is the construction equipment, which was estimate for the production turnover in China domestically 508 billion renminbi. Other machinery, this is always a little bit tricky. Anything that is a special tailor-made machine is counted into other machinery. And anything that is, maybe a steel, how do you say, a steel structure or any large process technology solution or specialized machinery that is tailor-made for a customer in China is other machinery. So this figure is quite high. So these are individual solutions for process technology, mechanical engineering, estimated at 489 billion renminbi. Then number 4, I already mentioned it earlier, material handling. So actually this is really a very high production amount, turnover or production of estimated 370 billion renminbi in the year 2012 in China. And then number 5 is precision tools, which is estimated at 288 billion renminbi. Yeah, so I think this can give a little bit of an idea for companies in which segment you could be active in China. It can be a directive in which sector to do more analysis and see the customers. In addition to this information, I would like to point out that there is a general development, especially in northeast China, for stronger mechanization of the agricultural sector. I already mentioned the agricultural sector development, but northeast China is where you have the large state farms, and they are now, for the past year, very strongly interested in purchasing special solutions to modernize the agricultural sector in the state farms. Number 2 is in eastern China. I also mentioned that because the factory sites are already quite tight, and there's not much space. Lack of space actually leads many customers in China to think about automation and robotics. Number 1 is the space problem, limited space availability, and number 2 is increasing labor costs. So in this crowded area, so to speak, in eastern China, Shanghai, Jiangsu, Zhejiang province, more and more Chinese customers are thinking about investing into automation and robotics, and this is also a clear trend. So I think this gives some very detailed and concrete examples in which sectors to invest. Yeah. Okay, so I think,
maybe because it's interesting to see how the market is evolving and what are the different trends on the market, the different regions and all that. But when it comes really to the needs of SMEs, do you see some particular sectors where there are more opportunities for SMEs than others?
Yes, actually I do, because considering SMEs, from my point of view, an SME has excellent sales opportunities in China if they are covering a special niche technology. Yeah, so a certain technology, a certain solution in the whole value chain where there are worldwide leaders, there is a strong demand in China for this kind of solution, and they can be very successful. For example, winning 1 or 2 reference projects in China, and then because also of the huge, single size of the market here, there is very positive development opportunities for such SMEs. Now, SMEs have opportunities on the one hand side. maybe to add to my recommendation, certain agriculture equipment, certain gearbox solutions, power transmission, hydraulics, also bearings, for productronics, for automation, also the CNC machine tools, certain material handling solutions, high pressure valves, etc. They are still in demand, and China is a good market to come here. A second point which I put into this slide, the high-end components of machinery and specialized components. There also always is, with a certain mechanical engineering solution, you have, of course, the situation of installing the equipment and then maintaining it. Maintenance is a point in China. So also for service companies in the maintenance for mechanical engineering, they have opportunities in China to be active here. Also spare part and service. Spare part, reservice and repair of components, repair of machinery is a topic that the Chinese customers need, and SMEs who are already active in China sometimes have the challenge that they cannot cover the whole country for the after sales or spare parts and repair services. So service companies in this sector who are specialized as a add-on service, I think can also should enter China or look at China to support the SMEs. Now, I think to close this, this is the positive opportunity side. Now, looking at this is the chances. Now, China is a large country with many chances, but especially SMEs need to be very careful about their technology transfer. Many European companies want to enter the Chinese market, develop long-term partnerships in China. This is possible from my point of view. There are examples of positive and good long-term partnerships, but two matching partners have to be found and identified. And I would like to mention that every company, especially SMEs who, for example, don't have a huge patent department in their structure in Europe, check the situation also carefully. So with a niche technology which is in demand in China, from my point of view, it is crucial to identify steps before selling this kind of equipment, how to protect the IPR and how to protect this know-how in the Chinese market. Yeah. So maybe you would like to add a few points to this.
Well, as you're saying, yeah, it's absolutely crucial. I mean, China does have the track record it has on intellectual property protection. I think, as you mentioned, there are quite some positive stories also, but it's essential that they establish a strong strategy. For the ones that don't have, as you say, very large IP or legal departments to help them, there is also another European initiative which is called the China IPR Help Desk, which can also provide SMEs with additional support on how to develop an IP protection strategy here on the Chinese market. But in fact, it'd be also interesting now with a poll to gauge the view of the different participants on technology transfer and more globally IP protection in China. So with this, I'm just going to launch a poll on this aspect, and I'm launching this now, so you can see the question appearing on your screens. So the question reads whether what is your angle on the technology, on your technology and technology transfer in China, whether it is that it's priceless and that you can only afford to export finished or semi-finished goods without risking anything, whether it's an asset to gain bargaining power but with much caution, C, an asset which you are willing to risk to gain long-term power and market share on the market, or D, that the sector or subsector you're working on has such short-term life cycle for your technology and steep learning curves that there is not so much risk to losing out. So I see that the answers have been going through. I'm leaving you a few more seconds, and with this I'm closing. So this is quite interesting, Stephanie, actually, because there is no company that indicated that it's priceless and that they will not risk it at all. So more or less half of the companies, and I'm sharing the results on your screen just now, are indicating that it's an asset they're actually ready to use to gain market access. Is this a little bit your experience, or would more of your members feature in some of the other parts of this poll?
Well, maybe in total it can reflect actually what most of our 3,100 members could be clustered in. So actually the majority, 20% of our companies are active in China. So they don't say it's priceless. There is a few companies who are active in China only with sales and service. They don't produce or manufacture or assemble here. There is a few examples, but I would say, this is probably most of the companies are active here, and they consider, sales versus loss of know-how. And maybe on a final note, I think the protection also is getting better in China. Yeah, the legal frame is in place. The execution still has a lot of problems to be solved, but China is going on that path, and it will be protected and executed, patents will be more how do you say, referred to in the future.
Well, as you're saying, I think I agree that as for IP, but also for more general aspects of doing business in China, it's important, and you mentioned this already in the first few slides. It's essential that companies are prepared, that they do their due diligence, that they know how to access the market and do their homework on being prepared and being protected. And actually you can find a lot of documents on preliminary due diligence, more generally, not specifically on IP, but also touching on finding the right partners, building a strong relationships, etc., on the website of the EU SME Centre. Just maybe I'll say a few words on the regulatory environment very quickly, because I think you've got still a few points which are quite important, but maybe just to mention very briefly that it's essential also that you're looking at and that you're aware of the standardization and certification assessment environment in China. China has a scheme of compulsory certification, which is branded here the CCC. Maybe to just go through this very quickly, I think you mentioned again in the run-up of this webinar, Stephanie, that this would only apply to some subsectors, and it's not so essential for most of the companies. But if this is concerning you, there is quite a lot of information on the website of the EU SME Centre on how to acquire CCC certificates and how to go about the system. Maybe you have a few more words specifically on the machinery sector. Well,
I think the main point is if companies sell and import into China a whole equipment and machinery, normally the CCC is not relevant, because only parts in this whole system are electrical parts. If it is spare parts, that's a different story. That's one thing. Another thing is, yes, again, looking at the segments for mining equipment, because this is underground equipment, there are special explosion-proof requirements. This is relevant. For the printing cartridges, it's relevant, and for certain areas of construction machinery, also again for underground, and then this becomes relevant. In general, 2002 and 2003 we had a lot of inquiries, but now I think most of the companies import the whole equipment, and there's no special requirement. Okay, so just also, sorry, looking at the time, there's 2 more slides as a recommendation for companies who would like to enter China. There is the possibility to establish a representative office. From our perspective for mechanical engineering, mostly it's advisable to establish a capital injected foreign investment commercial enterprise, because you can not only do distribution, warehousing services, you can do repair and maintenance. Service, repair, maintenance, importing spare parts is really one of the crucial sectors where mechanical engineering companies need also to be active in China. It's not finished by selling the equipment. You need to think about, okay, how can I, you have a warranty period, how can I continue to have good maintenance to my Chinese customers. Another option is, this slide shows it briefly, to establish the wholly foreign-owned enterprise. I said mechanical engineering is not limited or restricted. You are open to have 100% wholly foreign-owned enterprise in China. The minimum capital injection is not very high, and it's possible to do assembly of certain parts here in China. And most of our companies who are active here chose either one, foreign invested commercial enterprise and WUFI. Or you find a Chinese partner. This is also, of course, a possibility. Then my final slide. There we go. One more word. When selling into China, most of European, German manufacturers produce high-end machinery. Now, this, of course, has high-end machinery characteristics and a high price. It is important to find a clear approach for China, how to sell machinery into the Chinese market. So some of our member companies made the experience after 2 years that they could not sell their machinery because of the price. Price is not the only factor. There is the life cycle cost principle. What I hear from our members in China, that more and more Chinese customers understand this principle. So that means they are willing, they are becoming more educated, they are willing to spend more money into a machine that can work for 20 years. This is number one. Number two, you still have some Chinese clients and customers who are not willing to spend so much money, and in order to reach them, European manufacturers have been considering to downsize maybe the requirements from their certain solution and find an A brand and a B brand, or an high-end machinery segment machine and a medium machinery segment machine. So they go into 2 lines. This is the recent development. Beware, Chinese manufacturers maybe in the past have been only active in the low machinery segment. They are developing also in the medium machinery segment, and they are going the other way. They are developing not only a low machinery product line C, but they also have a product for line B, entering the medium and even the high-end machinery segment. So this is why the Chinese competition, for example, in the plastics and rubber machinery sector, injection molding, etc., is becoming very, very strong. Another area is textile machinery. The textile machinery sector also, there is a lot of Chinese competitors where you suddenly find yourself in this large medium machinery segment, and you have to think about your pricing strategy for China.
Thank you, Stephanie. I think that's quite useful, and I mean, as we're seeing also that the Chinese manufacturers are climbing the ladder of different segments. Mm-hmm. Well, there's always 2 sides to a coin, and the positive side is maybe also that there is more demand, more capacity to develop strong partnerships, competitors, yes, which are potential service providers, etc., which have a higher level of knowledge and therefore more able to meet the demands necessary from the European manufacturers to build these partnerships here locally. Mm-hmm. But of course, as you said, this is also meaning that companies, your European SMEs, have to be aware of this increasing competition and do a lot more homework, even more than before, to actually identify, as you've been explaining to us in quite some detail. And I thank you for that, the different markets and the real opportunities that are available for them on this market. Mm-hmm. So I think with this, I think we're coming to the end of the presentation. We actually had been covering quite a lot of ground, so there isn't much time anymore for Q&A. I'd like to maybe just very briefly mention that for any additional information, there is quite a few, well, you've mentioned a few sources during the presentation. Mm-hmm. I'd like also to invite you to report to our website, eusmecentre.org.cn, for the machinery report we've been developing, as well as a number of case studies in some subsectors. They are listed here. This presentation will also be available for download on the website, so you will have all that for reference later on in the next, well, either tomorrow or the day after. Maybe we have time for just one quick question. I'm not sure whether you have any experience on this, Stephanie, but one of the questions was how you consider the opportunities on the machinery rental market. Is this something where you see a lot of possibilities for European SMEs, or I mean, again, depending on the subsectors?
I have to admit, actually, for machinery leasing, there is several member companies who are using leasing methods to help the customers actually to find finance solution. I mean, this goes into the direction maybe of rental, and there is also a market in China. I'm not 100% familiar with the details on second-hand machinery equipment, sales of second-hand machinery. Yeah, there is several online platforms, but yeah, sorry, machinery rental, from my perspective, this goes into the direction of leasing, basically.
Mm-hmm, mm-hmm. So more of the other alternatives that you mentioned now about the leasing and about the second-hand machinery then. But with this, I think we've been taking mm-hmm. quite a bit of your time, but I'd like to thank you for your time, Stephanie, for mm-hmm. being with us today. We've had a webinar on machinery a few months ago, and actually it's been very interesting to have your experience with the VDMA and the VDMA's experience here on the machinery industry mm-hmm. in China. Thank you very much. I'd like also to thank everyone for your participation to today's webinar. If there are any questions that we didn't manage to pick on during the webinar, we'll get back to you, but also don't hesitate to register on the website of the EU SME Centre and to refer any questions you would have, again, on the machinery sector or any other sectors and business functions that you would be working on here in China. So again, also I'd like to invite you to participate to the short survey, which will pop up on your screens just at the end of the webinar. This is very valuable input for us to continue to improve the series. And we'll follow up next week and the weeks after with the next webinar invitation. So thank you very much, Stephanie, again.
Okay,
and thanks, and see you next week to everyone then. Bye-bye.